Hello and welcome to today's webinar, Credit Card Processing, a Detailed Guide for Merchants. Thank you all for attending. I know this is not the most exciting of topics, but it is important to your business to understand how it works. And I'll also be going over the new ResNexus Payments towards the end of the presentation, followed by a Q&A. But first, here's a little about me. My name is Gavin Wadsworth. I'm a hospitality researcher and content writer for ResNexus, and I'm pleased to be presenting for you today. I hope you get a lot of value out of this webinar. So, in the presentation today, we're going to cover the following topics: why you should accept credit cards, why credit card processing costs money, what costs are associated with credit card processing, what pricing options there are, how ResNexus Payments can help, and finally PCI Compliance. So let's start with why you should accept credit cards. Now, most of you probably already do accept credit cards, but you can also think of some of these reasons as reasons to accept more kinds of card, such as if you only accept Visa, maybe you want to consider accepting more types of credit card. Obviously, you know your own business. These are just things to consider. Credit cards have become the dominant form of payment in American everyday life. Forbes Advisor asked respondents with a bank account how they primarily pay for their purchases, and 91% say they primarily use a credit or debit card. And there are many reasons for this. Among them are convenience, security, rewards and cashback, and also to help build credit history. Another reason, businesses that accept credit cards appear more reliable and legitimate to consumers. It suggests that the business is professional and up to industry standards, and that the business regularly handles many transactions. This added legitimacy can lead to a boost in sales, since consumers feel more comfortable working with your business. Another reason, written checks come with some drawbacks, most notably the delay that comes with manually processing them. And there's always the risk that a check doesn't clear, and usually it takes several days to do so in the first place. Credit card processing helps improve your business's cash flow in this way. And finally, credit card processing is reasonably inexpensive to a business. When you actually go through and see what the impact is to your business, it's not as expensive as you might think. Now, before we move on to the rest of the presentation, I want to provide this example to help you understand why credit card processing costs money. This is a flowchart of how oil and gas is refined in a refinery. These are all the different checks and balances and steps that go into when oil is delivered to a refinery and then when it exits the refinery as a finished product of different grades for different purposes. This gives you a sense of scale for how complicated this process is. And this chart doesn't even paint the entire picture. It doesn't include the steps for what happens before and after the refining process. The point is, this is a complicated process with a lot of steps. The reason I show this is because credit card processing is actually fairly similar in this regard. It's not just swiping a card and money appears. There are a lot of steps and processes that go into it that we don't think about day to day. And I'm going to show and explain how it works. But in order to understand it and get a clearer picture, you first have to understand who the players are in this process. And by players, I mean entities that are involved in the credit card processing process. And first is the merchant. This is the business that accepts cards as a form of payment. In other words, this is you. This is the hotel, the bed and breakfast, campground, whatever the case may be. It could be Starbucks, Best Buy. Next is the ISO or payment gateway. ISO stands for Independent Sales Organization. These are the processors. They accept the card transaction information and send it on to the front-end processors. Some examples include Square, PayPal, and Stripe, as well as us, ResNexus Payments. Then there's the acquiring bank. This bank provides you, the merchant, with a merchant account to receive funds from settlement. They usually go through the ISO, so they're the ones backing Square or PayPal or ResNexus Payments. But we're not done yet. Next, we have the acquiring processor or front-end processor. These are processors that transmit the data from the ISO gateway to the card networks. Some examples you might know for this are Global Payments, First Data, and Chase Payment Tech. Speaking of card networks, these are probably more recognizable. So these are the card networks. Visa, MasterCard, Amex, and Discover are obviously the biggest ones. These are the card brands, and they've built their own networks that enables these real-time transactions. These card brands are also the ones who set the rules and standards for their network participants. So if you've ever been frustrated at a bank or the card issuer or even your credit card processor, many times the rule that frustrated you was not done by the processor or the bank, it was the rule that's required by Visa or MasterCard or Amex or Discover. They set up the networks and the rules, including the PCI Compliance rules, which we'll go over later on in the webinar. Then there's the issuing processor. These connect and pass information from the card networks to the issuing banks. And examples of this include TSYS, Fiserv, and FIS. And lastly is the issuing bank. This is the bank that actually issues the customer's credit card. So if your customer hands you a credit card, that card was issued by a bank. It might be a Visa card, but many banks issue Visa credit cards. There's Chase, Bank of America, Wells Fargo, credit unions. They issue these cards with the permission of the card brands, but they are actually the issuing bank. So those are the players in the credit card processing world. But how does it all work? Well, now we get into all the steps in this process, much like the oil refining process example from earlier. And even this is not every single step. There are smaller ones in between here and there, but this will give you a good understanding of generally how it works. So let's start with the card transaction. When a customer swipes their credit card at your establishment or pays online, it goes from them to you, the merchant. Then, your card reader or the online store or booking engine grabs that information and sends it to the ISO gateway. So again, that would be Stripe or ResNexus Payments or whatever your ISO or gateway is. Then, the gateway takes that information, encrypts it, and sends the credit card details and the cardholder's credentials to the acquiring processor. And a reminder, the acquiring processor would be something like Global Payments or First Data. Once the acquiring processor receives this information, they identify the card network associated with the card. So is it a MasterCard? Is it a Visa? Is it an Amex? Then they connect with the matching card network. So that card network, so Visa or whatever, receives the payment request and determines which bank issued the card and routes the transaction to the issuer processor that is affiliated with the issuing bank. So if it's a Visa, then Visa will look at the card and determine whether it's a Chase Bank or a Bank of America or what have you, and then send it to the issuing processor for that specific bank. The issuing processor validates that the transaction is not fraudulent and sends the request to the issuing bank. The issuing bank, in turn, verifies that the cardholder has sufficient credit on their account to cover the purchase, and if they do, it sends back an approval response to the issuer processor. The issuer processor then forwards that approval back to the correct card network, and then the card network, in turn, forwards the authorization to the acquirer processor. and the acquirer processor then relays it onto the gateway. And then the gateway ISO notifies the merchant customer credit card reader that the transaction is approved. Then the customer can take their goods or reserve their room or what have you and be on their way. So if you're standing behind the counter as the card is being swiped, you know that it takes a couple seconds usually for the payment to be approved. All of this is what's going on behind the scenes in those couple of seconds. So if you really look at it, there's a lot going on in just that small fraction of time. But from a technical standpoint, you haven't actually been paid yet. The customer's credit card was authorized and approved, validating that they're good to make the purchase. But the funds haven't actually been transferred yet, and that takes a bit longer. So let's take a look at the other half of the process to see how the funds actually get into your bank account. This is how you as a business get paid, aka the most important part. To settle or disperse funds, most processors, including ResNexus Payments, settle funds daily using the following process. At the end of each day, the gateway submits a batch of approved authorizations to the acquirer processor requesting cash settlement. Basically, it sends a list of all the purchases that were made from your business from that day. The acquirer processor subdivides the batch, grouping the authorized purchases by card type, so again, Amex, Visa, MasterCard, and then sends each card network the subdivided batch that is applicable to them. The card network receives their batch and further divides them by applicable issuing bank, so again, Chase or Wells Fargo or Bank of America. They then send these smaller batches to the issuer processors associated with each specific issuing bank. The issuing processors for each of those banks post the approved transactions to the cardholder's statements. And so you've seen your statements and how they group them in categories such as travel, food, gasoline. This is done by the issuing processor. At the same time, the card networks calculate the net settlement required from each issuing bank and submits a transfer order to the applicable issuing banks. The issuing banks then transfer the requested funds to the acquiring processor, and then the acquiring processor deposits the funds into the acquiring bank. So once again, the acquiring bank would be the bank for your processor, so the bank associated with Square or ResNexus Payments or whatever processor you use. And then if everything is in order, then the acquiring bank sends the funds to the merchant's bank account. And this is the bank that your business uses. Like I said, most processors perform this entire process daily, and I of course mean business day. If someone books a room at your hotel on a Friday night, you probably won't see the transfer until Monday, or Tuesday if Monday is a business holiday. So here's the big question. Why does credit card processing cost money? Well, each of these steps and processes costs money. Each respective entity has built their infrastructures, built APIs to talk to each other. They employ numerous resources to keep the technology up to date. There's PCI compliance and security. Not to mention that each have support departments, risk and compliance departments to help find and root out fraud. There are constant attacks on the systems, around $30 billion in fraud losses annually. So to cover the costs of all these networks and systems and connections and everything, that's where you get the fees associated with credit card processing. Usually on the back end, it's the acquiring processor and different banks charging each other, and they in turn pass those fees on to the people upstream. You as a merchant are going to be billed by the processor, so Square or ResNexus Payments. Some of the fees are what we call pass-along fees, meaning that the processor just passes along the fees that they were charged. So for example, if ResNexus Payments is charged by our back-end processor, we can pass that fee right along to you at cost. So pretty straightforward. In other instances, processors may add additional fees to cover what they are charged, as well as to make a profit. So here are some of the most common fees that you see in the industry. So first up is interchange fees. These are charged directly from the card networks. Your payment processor does not have any say in these. Nobody sets these except for the card brands themselves. These are charged every transaction, and the fee amount depends on a myriad of factors, from card brand, card type, to industry. So the interchange fee is not the same for every transaction. The fee for using a debit card is lower than the fee for using a credit card, for example. And even among credit cards, some credit cards have a lower fee if they're non-rewards Visas or MasterCards versus a Visa that is a rewards card. So these fees are very variable and they are unavoidable. Then there are payment processor fees. These are the fees that will be charged by the processor, so Square or ResNexus Payments. They use these fees to help cover the costs of some of the back-end fees if they don't do pass-through fees, as well as other costs the processor has to pay that you don't see. So onboarding, payroll, licensure, OFAC screening. Basically, the processor needs to stay in business too. Then there's assessment fees. These are also by the card networks and are based on total monthly sales. You'll see them in aggregate at the end of the month or end of the quarter. Then there's terminal fees. Some merchants have a physical terminal or a machine that they either purchased or are renting from the processor. Many processors actually don't let you buy them. You must instead rent them. At ResNexus Payments, we do allow you to buy the terminal with a one-time payment. Other processors might charge you anywhere from $5 to $20 per month as a terminal rental fee. Then there's payment gateway fees. Many merchants, especially e-commerce, pay gateway fees linking your digital shopping cart or software to the processors. And then finally, there's incidental fees, also called if and when applicable. So these are chargebacks, monthly minimums, service fees, maintenance fees, PCI, and these are only charged to you if they happen. So why are there so many fees? Well, the reason it's so complicated and why there are so many fees is because all these various entities have built sections of this payment processing highway. But they didn't just do it for free, so you'll have to pay the toll to use it. And just as tolls cover highway usage, fees compensate entities for facilitating secure credit card transactions. So now that we've seen all the fees that come with it, let's look at the different pricing structures you see in this. When it comes to credit card processing pricing structures, there are 4 of them. First is Interchange Plus, there's flat or fixed rate, there's tiered plan, and there's subscription. And these cover pretty much every kind of pricing structure that you see. And I'll go over all 4 of them, how they're structured, and the pros and cons of each one. So hopefully, you'll be better equipped to figure out which one works best for you and your business. All right, so first is Interchange Plus. This is when the processor charges you the interchange rate associated with the card plus a markup from the processor. So here's an example. Interchange rates vary between 1.1 and 3.5%. Debit cards and non-rewards Visas might hover closer to the 1.1 side of things, while high reward Visas and American Express will range toward the higher end of 3.5. And again, this is non-negotiable. It's taken immediately by the card brands. Now, on top of whatever this interchange rate is, your credit card processor can add what they call a processor markup, because they have to cover their costs and they want to make money too. And these vary by processor, but are usually at rates high enough to cover their additional hard costs like transaction fees that are charged by their backing bank that you don't even see. These additional fees are either pass-through fees required of the processor that they pass to you, for example, chargeback fees, batch fees, non-payment fees, or they're fees that the processor includes to help offset risk or other costs. So PCI non-compliance fee, maintenance fee, terminal rental fee, and so on. All right, now we'll go into the pros and cons of Interchange Plus. So, pro, Interchange Plus is usually the most transparent, and it's most similar to pay for what you use. So, if you have a lot of high rewards card transactions, you'll see a higher interchange fee. If you mostly end up transacting debit cards, you'll see a lower interchange fee. So for this, you'll see on your statement how many of each type of card you used. Another pro, it could end up being lower than other pricing options, just depending on circumstances. So if you take a look at your statement and see it's pretty much all Visa cards from credit unions with no rewards, or a lot of people using debit cards, this is going to be a pretty low cost for you because you'll be paying lower interchange rates to the card brand companies. But now let's go ahead and take a look at the cons. First up, pricing with this structure is complicated and variable. It can kind of feel like drinking from a fire hose with all the charts and numbers and graphs, with different fees for different types of card and so on. So it can be kind of hard to parse exactly what's going on, and it can be pretty variable in how much it costs. Like I said, sometimes you might see low costs, but you could also see periods of high cost if people are using high rewards cards and such. Another factor here is that the interchange rates can change whenever the card brands want because they're the ones who regulate this. And this can make it difficult to forecast costs each month. To give you an example, these rates have changed twice in the last 3 years. And once again, because of what I talked about earlier, this structure could end up being more expensive than other options because it's so variable. All right, but now let's go on to the second pricing structure. This one is flat or fixed rate pricing, and it's becoming more and more popular. Basically, this is where the processor will charge you just one flat rate for all transactions, regardless of card type. So the processor blends all of the interchange fees and everything and gives you one flat rate. So Stripe and Square really pioneered this pricing structure and became very successful because of it. It allows the merchant to not have to worry about card types or brands or anything, which is great for the consumers as well. ResNexus also offers this pricing structure, but we do have some variable things as part of that. The fee structure usually includes a fixed rate plus a per transaction fee. For example, 2.9% plus 30 cents per transaction. So it's still variable in the sense that the number of transactions affects your pricing, but you get a flat 2.9% instead of the interchange rate. Now, the pros for flat rate, obviously, first is that it's easy to understand. It's reliable, you're not getting overwhelmed with all the different fees. Also, your rate stays the same, making it easier to forecast monthly costs. So if you know to expect around 500 sales in a month, then you know what your rate is going to be. It doesn't matter what kinds of cards they're using, doesn't matter what Amex decides to do with their fees, and you know what you'll be paying. And finally, you could end up paying less than what Interchange Plus would cost. It just depends, again, on the circumstances for that month. Obviously, the other side of that coin is that you might end up paying more on months when Interchange Plus would have been cheaper. For example, if 80% of all transactions for 1 month came from debit cards. The next pricing structure is subscription-based pricing. This one's not as prevalent, but it's kind of similar to Interchange Plus. The difference is that it replaces the processor markup with a flat monthly subscription fee. So this might look like the normal interchange fees plus a $59 per month subscription fee, plus 20 cents per transaction, and then plus any if and when applicable fees. Subscription pricing often requires minimums, and this varies by the company. So what this means is that they require you to have a minimum amount of processing per month, and if you don't meet that minimum, then you'll have extra charges to make up the difference. So this really appeals to larger businesses who have a lot of transactions. All right, pros and cons for subscription. The pros are that it's transparent pricing because it's a flat subscription rate. It's great for larger companies who have a lot of revenue. And it might be cheaper than traditional Interchange Plus model or even the flat rate model. However, the pricing can be complicated and variable, again, because of the minimum requirement, and also because the interchange rates are subject to change by the card brands, as we talked about earlier. They also usually come with high restocking fees. Also, they're very strict about working with high-risk merchants, such as if you had a bankruptcy or a lien or something like that. And they usually will not work with companies processing under certain thresholds. And one more thing to note about subscription pricing is that not all processors offer this at all. It just depends on the company. All right, last one for pricing structures. Tiered pricing seeks to simplify the pricing by offering 3 different flat rates that are dependent on card type and purchase method. So instead of having just one flat rate, they have 3 different flat rate options, and they are qualified rate, mid-qualified rate, and non-qualified rate. So qualified would be debit cards or cards that are present or non-rewards cards. Mid-qualified would be card-present transactions for standard rewards cards, and non-qualified would be transactions for premium cards and all non-present transactions. An example would be if they offered you 2.4% for qualified purchases, maybe 2.75 for mid-qualified, and 3.2 for non-qualified. So this pricing structure is sort of a blend of flat rate and interchange in that way. All right, so the pros for this are that it is simplified pricing. Not quite as simple as normal flat rate, but even so. And it's pretty easy to forecast costs each month. You still have the variable of what level of qualified the bulk of your purchases are, but now at least they all fall into 3 distinct boxes, which is easier to work with. Now, as for the cons, most people don't realize this, but most transactions actually fall into the higher tiers. So you'll only be getting that 2.4% for card-present transactions that are non-rewards. But if you sell primarily online, you're not getting that rate. Online transactions are card not present, which immediately bumps it up to the highest cost tier. Now, if you primarily sell in person with the card present, this might be a better option for you. But it is a little confusing because qualified purchase sounds kind of like approved purchase, but it actually refers to a pretty specific set of circumstances that you might not see a whole lot. So, which one is best? The bottom line is that it depends on your business. It's not one size fits all. You have to figure out which pricing option works best for your business and find a plan that caters to it. So maybe Interchange Plus makes the most sense for your business. You pay for what you use, and if you find out that everyone's using debit cards rather than high rewards cards, then you might see a good benefit there. If you find that many of your people are using higher rewards cards, then flat rate model may be best. It's simple and reliable. You might fall behind other pricing structures some months and pull ahead other months, so it all kind of evens out. If your business is large enough and you find a processor that offers it, you might go with subscription model pricing. Or if you find that the majority of your transactions occur in person and people aren't using high rewards cards as often, then maybe tiered pricing is best for you, since you'll have a higher ratio of qualified purchases. All right, everyone take a deep breath. That was a lot of dense information. So give yourself a pat on the back for getting through it. But now I'm going to go ahead and talk about how ResNexus Payments can help you out. So ResNexus can simplify your payments. We're in-house, which allows us to provide enhanced automation and reconciliation for improved customer service. Optimization and reduced staffing requirements reduces the number of third parties you have to deal with, so you can deal mostly with us. And of course, it's nice to have the integration of the software and payments benefits located within the booking engine. Again, that's the benefit of being in-house. We offer a basic flat rate following the Stripe model of 2.9% plus 30 cents per transaction. We can also try to match or beat your current rate. And as part of that, we will analyze your statement to show your true net effective rate and offer a flat rate to match or beat it. Or we could try to match your current pricing style. And finally, you can always contact your ResNexus support representative with any questions you may have. We're happy to walk you through this and figure out your best option, even if you don't end up using ResNexus Payments. Now, one thing to note about rate matching. When it comes to analyzing your statements, we run into this situation all the time, where people send us a statement saying they have a certain rate and they want us to match it, but they're not actually getting the rate they think they're getting. And this is stated rate versus net effective rate. Your stated rate is the rate you think you're paying. Your net effective rate is the true rate you're actually paying, taking into account additional costs and fees. So someone might say, we're getting 2.6% plus 30 cents per transaction. And what the customer hears is, I'm getting 2.6. So they come to us and say, I want 2.6%. So here, a customer thought they were getting 2.2% because that was what they were quoted. 2.2% of 20,000 is about 450, so that adds up. But once you add in all the additional fees, it turns out to be closer to 2.97% in this particular month because of all of these other charges and fees. And processors are notorious for these kinds of hidden fees. They advertise 2.2%, but aren't highlighting all the other charges and fees that come with it. So people think they're getting a great deal without looking too closely at the details. So that's where we can come in and analyze your statements to find out your net effective rate. And in this case, we were actually able to offer this customer a better deal, even though the percentage appeared to be higher than the 2.2% they thought they were getting. All right, now we're moving on to talk about the PCI compliance, and this will be the last talking point I have before the Q&A. PCI compliance is very important for you as a business owner to understand what it is and how it works. So, what is PCI compliance? So it stands for Payment Card Industry Data Security Standard, PCI DSS. And this is a standard put forth by the 5 largest credit card companies to help reduce costly consumer and bank data breaches. So that's Visa, American Express, Discover, and MasterCard. They got together and made these rules. They created the network. They get to make the rules that everyone else needs to abide by. So that means that any business that accepts even one credit card payment per year is required to comply with PCI standards. And as of January 2017, all businesses, regardless of size, are required to validate PCI compliance for their business annually. So every year, you need to submit your validation of PCI compliance to the card brands. PCI organizes businesses into 4 different compliance levels depending on processing volume. Now, there are costs associated with PCI compliance. It's not something that's free. There are costs to keep your business compliant, as well as other costs. 65% of small businesses are actually not PCI compliant. Now, if you've never dealt with PCI compliance, never worried about it, maybe nothing bad's ever come of it, you might be wondering what's the point. Well, technically, if you're not PCI compliant, the card brands, so Visa, MasterCard, and so on, they could bar you from their platform if they chose to. They usually don't, unless something happens, but in theory, they could kick you off for not being PCI compliant, which would then mean you would be unable to accept credit cards on their system. And the other risk here is that if you do have a security breach, you will be held responsible for it because you were not PCI compliant. So you might not only be kicked off the platform, but you'd be held responsible for the fraud amount, which for a small to medium business can be pretty devastating. So what are the requirements that come with PCI compliance? Well, there are 12 main requirements, and I'm not going to go over all of these, but the first few are, first, you have to maintain a firewall to protect cardholder data. You can't use default passwords for security purposes. You have to securely protect stored cardholder data. So, for example, if you have a staff member who writes down credit card numbers on a sticky note and then leaves them on the computer monitor, that's actually a violation of PCI compliance because that's not secure. And then the list goes on from there. I mentioned earlier the different compliance levels. And these basically refer to the size of the business or the number of transactions per year. Most small businesses and most every ResNexus subscriber is merchant level 4. So that's what we're going to be focusing on today. Merchant level 4 means that you process fewer than 20,000 e-transactions per year and fewer than 1 million total transactions per year. And what's required of you at level 4 for PCI is an SAQ, or a self-assessment questionnaire, also a quarterly network scan, and finally an attestation of compliance. So let's go over these in a little more detail. First is the Complete a Self-Assessment Questionnaire. There are multiple questionnaire types according to business type, so you'll want to find the correct one for your type of lodging industry. Many credit card processors require SAQ to be validated by a qualified security assessor, or QSA, who will then turn in the questionnaire for you. Then there's the quarterly network scan. So level 4 businesses that take electronic payments are required to have a quarterly network scan completed by an approved scan vendor, ASV. And sometimes the QSA, the qualified security assessor, will also perform these ASV services. You have to have the attestation of compliance. And this is often included with the self-assessment questionnaire, and the security assessor can help you with this as well. Once you get through all these, then you'll get a badge that says you're PCI compliant for that year, and then the following year, you'll have to do this process over again to renew your PCI compliant status. All right, now let's go over the costs associated with PCI compliance. There are fees incurred by you, the merchant, to third-party companies such as the QSA and the ASV. Qualified security assessor fees are usually $100 to $500 per year, depending on the company you go through. So QSAs often offer assistance to merchants. ASV fees are usually $100 to $200 per quarter. And then other things that could be considered fees in this regard would be your antivirus software and things of that nature. With ResNexus, we have a company that we have contracted with called Security Metrics, and they act as your QSA and your ASV. So if you sign up for ResNexus Payments, they charge an annual fee of $79.99. And for this, they help you fill out the questionnaire each year, they submit it on your behalf, and then they do your network scans and make sure you're PCI compliant. Then they send that to both your processor and the card brand so that you're in full PCI compliance. Now, if you're not PCI compliant, there is a big chance you might start paying PCI non-compliance fees. These fees are given by processors to encourage you to become PCI compliant so you don't have to pay those fees. The processors aren't required to charge this fee, but they may do so. It just depends on the individual credit card processor. And then there are actually PCI compliance fees. An example of this would be like the $79.99 fee that Security Metrics has, which is vastly cheaper than non-compliance fees. These are sometimes called security fees or regulatory fees. And then there may be other costs involved in ensuring that your physical location is PCI compliant in terms of security and such, but those are basically all the costs that come with PCI compliance. All right, so now going back to ResNexus Payments. We do require all merchants to be PCI compliant and to complete an annual SAQ, as well as a quarterly network scan. The bank that backs us for payment processing requires us to use a licensed third-party QSA to validate both the network scan and the questionnaire that you do every year. And as I said previously, we use Security Metrics as our QSA, and they will perform those quarterly network scans for you. They charge an annual fee of $79.99, which is actually lower than the average market rate, which is currently a little over $100. And one additional thing, ResNexus does not currently charge non-compliance fees for subscribers. We've been nice about that because most of our customers do it within the year, but we do want you to be PCI compliant because it is important. But just know that many other processors do charge for that. All right, now I know that was a lot of information in this presentation, and it's pretty dense stuff, but it is important for you to understand how it works for your business. It's important to be PCI compliant, so you remain in good standing with the credit card brands, and also so that you're protecting yourself and your business from security breaches and fraud. All right, and we've come to the end. I'll get to the Q&A in just a moment, so feel free to start dropping your questions into the field provided. In the meantime, I'd like to say that if you enjoyed this webinar and would like to view any of our past ones, you can do so by going to our website, resnexus.com. When you scroll to the bottom, you'll see a Webinars button, which will take you to our entire library of past webinars. You can also register for upcoming webinars on this page. All right, and with that, we have come to the Q&A portion of the webinar. Thanks everyone so much for taking the time out of your day to watch, and I look forward to answering your questions, and we'll try and get those answered as fast as we can and in the order they appear.
All right, we've actually had a question already. Someone asked, as part of PCI, are we as a ResNexus customer taking our customer's credit card info, or is ResNexus? And for that, so for storing the card, we are the one who stores that information. But on your end, the PCI would be how you interact with the card. That's kind of your compliance. So, are you writing the card number down? Who can see the cards, and does that staff member have a background check and things of that nature? All right, I'm actually going to have Amy help me out responding to some of these questions because we've got a lot coming in, and she knows more than I do. So, hey, Amy, thanks for coming on and helping with the Q&A.
Yeah, absolutely. I'm happy to help. So we also have a question. If all of your reservations are done through ResNexus, so ResNexus really handles all of your credit card processing, and it just passes that card over. Really, when they do that PCI compliance questionnaire, they want to know, yes, you're not handling it. Yes, it's all being pushed through your third party, which is us. But they just want to go through and verify that you're not handling your credit cards in any way that could compromise that card. So really that questionnaire ends up being pretty quick for you due to the fact that everything is passed through ResNexus. Another question is what about chargeback queens charging back on non-charged items? Will the recharging of them be put you out of compliance? Really, on that note, it shouldn't put you out of compliance. What happens is, what I've seen is if you have a whole bunch of chargebacks, um, they might stop and ask a lot of questions on like, why are you getting chargebacks? What are you doing to prevent chargebacks? That kind of thing. Like I had a property um, talking about booking.com. One of the questions earlier was about booking.com. We had somebody who was doing 100% of the reservation up front. Um, but then if a booking.com guest canceled, they weren't turning around and doing any sort of a refund. And so they were getting a lot of chargebacks. But with booking.com's policy, they were supposed to do a refund to that guest. And so they were asked why. So when we're looking at those, you do need to make sure that, one, especially on the booking engine, you're getting those signatures to get it so that we can fight those chargebacks with you. The next question is the 2.9 plus 30 the net effective rate for ResNexus payments? Yes. So what it is we don't have any additional fees. The only other fee that you might see is the $25 chargeback fee. Other than that, and then the once a year PCI compliance fee. Other than that, there's really no other. There's no other fees that go along with that. Okay, what about policies of properties not being honored, late arrival fees, extra person fees, holiday fees, because third party OTAs. Really with the OTAs, you also have to look at what the OTA's policies are on that, because when listing on an OTA, you do have to follow the OTA's policies. So you want to make sure that you're pushing out your extra person fee on that. And then make sure that you are putting on your holiday rates. But as far as when it comes to like refund policies and stuff like that, that is all honored by whatever the OTA has. Yeah, with booking.com not having you don't have a signature on file because it is coming from booking.com, but when they do arrive, I do have a lot of properties that have those that they just have them sign on site, or we is usually what I've had most of my properties do, is just have them sign when they get on site. Next question, do we get charged for both transactions when we send back money from a cancellation? Yes, it is still charged, and that's because, again, when Gavin was going through those slides, when you do a charge, when you do a refund, all those parties then still get involved, so they do charge for those when you do a refund. So is ResNexus fees for non-qualified, non-present cards lower than the fees for the same types of transactions charged by Square? What about other processors? Because we are the same rate, no matter if the card, you swipe the card or the card is just done through the booking engine, which is your non-qualified or non-present, it is the same rate. So we are a lower rate than most other processors because of that. Okay. So with American Express and other fee-related cards, it does, because of how ResNexus is set up, we don't charge extra. Usually, when we set you up, your American Express stuff comes through us now. We'll link your American Express account to our system. So we don't charge the extra fees that American Express normally charges. So yeah, we don't charge those, and you don't have the extra charges for those rewards cards either. So it is a lower rate for all of that. Okay, so the next question is, do you help put the badge to show we passed our compliance requirements on the booking engine page? I've passed many years in a row, but no clue how to display that on the website for our customers to feel secure. So with that, I would want to just talk with my website team. I do know that if you have a ResNexus website, we will put that badge up for you. As far as other website companies, usually we just say send that over to your website company and they should be able to help you put that on. I hope that answers your question. The other question is this website downloadable so that we can access it later for review? Yes, this will be downloadable by the latest. My guess would be Monday, usually, or Wednesday of next week, but it should be available here in the next week or so.
Yeah,
And you'll
that's
see that
correct.
on
It's
that.
usually, oh, sorry, that's correct. It's usually up on YouTube pretty quickly, so the next couple days, and then it'll be on our website, on our library, sometime by next week.
Yes, great. So next question, are there any card brands that we can't accept? We accept the Visa, MasterCard, Discover, American Express, all of those main card brands. As far as like others, like I've seen the JCP or something like that. We don't have that, but your major card brands we do accept. China Bank. As far as do we accept it, if it has a card from Visa, MasterCard, or American Express, yes. Otherwise, no. Yeah. Again, European bank, same thing. As long as it's, most of the cards I've seen from the European banks are the Visa cards, and those are accepted. Yeah, the JPC at this time, we don't accept at this time.
Thanks so much for covering all these questions for me, Amy. You know a lot more about this than I do, and I really appreciate you. Looks like we're coming to the end of our questions. I'll give it another minute or two. If anyone has any questions about the topics we talked about today, and we'll try and get those answered for you. And if we can't answer any questions adequately for you, you can always reach out to your support representative to try and get more personal information from them.
So John just asked, good sales point, your Nexio system is good. Can you talk about that? So we have actually two different connections right now, Nexio and another third-party provider, which is Zipped. Both of them are really great. As far as the rates are really the same. Setup is really quick. We go ahead inside ResNexus there. If you go into ResNexus settings, credit card processing, and sign up, you can actually fill out a application right on there. We send that right over to our third-party providers to go ahead and make sure that we can get you guys the best rates possible. Setup usually and onboarding usually takes anywhere from 2 days to 2 weeks. We collect all the information that we need so we can go ahead and send that on over. And then you get that information and go through underwriting and get that approval and really quick, actually. Like I said, it's usually like two days to the longest I've seen it take is 2 weeks. And it is nice because it is all integrated right into ResNexus, so it really helps with some of the back and forth hassles with going in and manually collecting credit cards or going in and manually running credit cards, just having that be a quick streamlined process right through. Yeah, the batch chargebacks and response times do save a lot of time. John, are you I'm guessing you're on the Nexio connection. Um, it is very nice because they do send you a lot of emails and go through and give you a lot of information. They're really great at doing their batch outs and sending those out each night and getting you all the information that you need in a timely manner. So, and really great to work with their support. So, matter of fact, both of our providers have been great with getting back the chargeback responses and those batches. So, any other questions for us before we take off?
It looks like that's pretty much all we have, and we've pretty much filled up the entire hour, so that's awesome. Yeah, thanks everyone for attending, and I hope you all have a great rest of your week.